this video, I'm going to be going over a high win rate supply and demand trading strategy that has over an 80% win rate and can help you become profitable in under 90 days. Be sure to stay tuned till the end of the video as I'm going to be going over a live chart example on gold. Let's get started. So supply zones are areas in the market where people look to take sell positions, and demand zones are areas in the market where we look to take buy positions. Now, what is a demand zone? I'm going to explain further in this diagram. So in order to identify a demand zone on the charts, we want to look for the last down candle before the big move up. So in this example, the last down candle would be somewhere around here, and you guys can see the big move up happened, and once that big move up happened, we get a retracement, and on that retracement is where we enter. Now, this isn't as clear as it is a diagram, but on the actual gold charts, this will make much more sense. Now, in a supply zone, it's once again the same concept, the last upside candle before the big move down. Now, if any of this doesn't make sense right now, please stay with me as I'm going to be going over the chart example in just a second. Now, before we move over to the actual chart example, I wanted to go over some results of our clients who used our gold trading bot, and here are some of the profits. So one of our clients made $1,400. Another one of our clients made $2,600 without a single losing day. And here's a 200k FTMO account that was passed. As you guys can see, just over $11,000 was made. And you guys can see this is the FTMO results. 10 days it took to pass. So if you are interested in passing your prop firm challenge using our AI trading bot, you can get access today. Hit us down in the link in the description. So let's move over to the chart example. So this example is a demand zone example. So what do we look for? So the first thing we do is identify the last down candle before the big move up. So the last down candle that occurred is this one. So this is the last candle. So we're going to mark out the high of this candle and the low of this candle. So what do? We wait to see if there's large volumes in the market. And as you guys can see, we had we had three massive candles. And what makes this is a high probability trade, and what you want to look out for before entering a demand zone is for some form of liquidity to be taken out. So as you guys can see, this liquidity right here was taken out, and we also tapped into the demand zone. So what do we do then? We simply enter our position. So we'd put our long position at the start of the demand zone. We'd put our stop loss below these lows right here, and we can target a simple 1 to 2 as I mentioned in every single one of my videos. However, when it comes to supply and demand, you can target for a much bigger risk to reward, and you will most likely hit TP, especially for a trade where there's some form of liquidity being taken out. It makes it a much higher probability trade. So we're going to target this liquidity up here, and we're going to see how this trade plays out. Now, just to be clear, once again, our demand zone falls under, forget my horizontal line, in between these blue boxes. So the lines that I've marked out, this is our demand zone area. So price has tapped in, but it's not fully tapped in. You don't always need to enter at the start of a demand zone as well. So you can see we are fully tapped in right now. Obviously, price can go as low as this low, and that would invalidate the trade. But we're going to see how this trade plays out. So we have some consolidation. I'm going to extend the P&L. And as you guys can see, we did smash TP. In how long did that take? So it took a few hours, but you have to remember this was a high risk to reward trade. If you wanted to exit at a quick 1 to 2, you could have exited within the first hour of this trade. Now I'm going to be moving over to a supply zone example where we look to take short positions. So the first thing I can see we're going to do is mark out our last up candle before the big move down. So we can see this is the big up candle right here. So we can just mark this out. So this is the zone where our supply zone is. And we also need to mark out some form of liquidity. So I can see liquidity resting right here. So we're going to wait for this liquidity level to be taken out and to be tapped into this supply zone. So let's see what happens. So as expected, liquidity was taken out. We tapped into the supply zone. Now what we do is simply place our short positions. We can target this once again, and you can put your stop loss above this high, but as its price is at all-time high right now for gold, you want to put it slightly above. So I would target something like this, slightly above, a few pips up, so you guys can see. And you can target this low right here. You can even target a lower low or even a bigger low down here. So we're going to target this low right here, and let's see what happens. I'm going to speed this up. So we did tap in, and as you guys can see, straight away price is starting to go down, and just like that we hit TP and price is continuing to go towards the downside. And this was a 1 to 9.75 risk to reward. Now as I said before, the average risk to reward is 1 to 3 to 1 to 5. Now if you have any questions for me, be sure to leave them down below. And once again, if you are interested in our gold trading bot, the link is down below.